Okay,
Live block ES.
good morning. Um, Welcome everybody. Let's hope the YouTube is working well today, and that people in Discord can also see this. On the Discord, we have a dedicated channel, so feel free to put any comments in there. I'm just turning off a couple of sound alerts that would otherwise distract from the broadcast. This is a pre-market breakfast broadcast. My name is Moby. Um, I've got a very quick bio on this page, but first of all, I'll just do some housekeeping. A general disclosure, all Bookmap Limited materials, information and presentations are for education purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Quick flip back to my bio, just another recap. Yeah, I've been around quite a while. I've seen a few different things, been involved in a few different careers. I still maintain a very high interest in the markets. I've got a very background in terms of words and numbers, and these days I also love programming, so I'm involved in the discretionary and automated side of the market. Let me get rid of that. Okay. Right. Okay. Let me just blow this up a little bit. Okay, the agenda for today. By the way, if there are any comments on the YouTube, I can see them and I can talk to those comments if anybody has any questions. So a very quick reference to an update on Bookmap overnight. I don't know whether anybody has relaunched their Bookmap or not since today started, but I noticed that there has been an SI update, a stops and icebergs indicator update, both of the on chart and the sub chart indicators. I'm a big user of those and I will speak to those frequently. It also, it also feeds into some of the issues I've been having this week. I think, I think anybody that watched the show last week or last Wednesday knows that I had some YouTube glitches. And I think one of the things I'd just like to say is that technology issues are part and parcel of this game. I'm extremely lucky in that I have another backup PC. It's a PC I've spoken about before. It's 6 years old, but it works beautifully. I was able to pick it up, plug it back in, and separately work on the new build, which I've talked about. And now that is back up and running, and that is what I'm using for the streaming. So it's just another issue that you've got to be aware of in your trading. You've got to have a technology plan, and that includes a backup plan. Right, okay. A quick recap of trading styles. I mentioned on Wednesday that I am a jack of all trades. So I'll look at all forms of price action, and I'll also look at other information which I can believe will get into, will give you some form of edge in the current scenario, and that will change rapidly. So for all the 10 years that I've been looking at futures, the little edges that I've used to supplement my trading decisions have changed. And we'll talk about one of those, which is listed there, options magnets, a little bit later on. Let me just pull up. Just this is a very basic Wyckoff chart. There's no copyright, nothing. I mean, I pulled this one off the internet. I've drawn one many a time before for myself. I first came across Wyckoff towards the beginning of my trading about 9 years ago, and it simply is, in layman's terms, a mechanism for the bigger players in the market to take the price from the lows to the highs and from the highs to the lows. So we're talking about accumulation to take it from the lows to the highs and from the highs to the lows. And this feeds into some of the setups that we're going to repeatedly talk about day after day on this webinar. One of the ones I mentioned on Wednesday, or it really covers about 2 or 3, is getting into this accumulation phase. We talked about breakout failures where it goes down and then bounces straight back up. So they're looking for fuel, normally stop runs and trapping sellers before they get a cheap enough price to take it higher. I can reference this chart again and again. I'm just having a quick look, see if there's any questions. No. Okay. But I would call this a framework, a reference framework for how I view the overall market. It is not edge in itself. It is just a map of how bigger players manipulate, and manipulates an interesting word, but how bigger players move the market from lows to highs and from highs to lows, and very much in between. Okay, going back to the agenda, right, volume profile. If I'm actually going to go on to these two charts next, which are actually of the European session, or the London Open, which is at 3 o'clock New York time, just about there, and that's the ES, I believe, and the other one is the NQ. I have my displays of price in Sierra to be limited by digits to keep the columns narrow, so I'm just checking exactly which one that one is. Yep, that's NQ, and that is ES. Okay, and I want to interface that with the Wyckoff diagram so that we can see, for example, if we focus this part of the discussion on the springs or the breakout failures, and how in every single session you can get those in NQ and ES. So I have not got my marker on here, so I'll just use the cursor. You've got a little breakout failure there. You've got a climax here. If I reference back to the diagram, you've got a little breakout failure here. In fact, you've got two. You've got one there, one there. You've got another one just here, which is a breakout failure of that one, and then they ride it up to the top. In ES, it's the same again. You've got multiple breakout failures. The easiest ones to spot are here, here, and I think there's a couple around here and here. And something which is very, very close, and I call it just about the same, is a test of the same area, or a double bottom in this case. It's the same principle. The bigger players are looking for a cheaper price to get positioned so they can drive the market higher. And when we move off to Bookmap, we will see that that's effectively what they've been doing for the entire afternoon. Quickly, before I do forget, let us have a look at the calendar. This is today's calendar, and the US Core PCE. Just to remind ourselves that in about 20 minutes we're going to switch to just focusing on the live pricing action and observing, not trading, just observing the level of volatility that should come in at 8:30. So there is that. Okay. Right. Okay. Let me just move on to the next one, which I wanted to show you about. It's another screenshot before we go on and start dragging around on Bookmap. You will often hear me talk about why I believe it's a good idea to have the ability to zoom in and out quickly on Bookmap. One of the main reasons that I upgraded my computer and primarily the memory and the graphics card was that the previous build was stuttering when I wanted to drag back and zoom out and zoom in. So here we've got NQ and ES in the Asian session. So you can see the time there. That's 11 p.m. at night New York time. And the NQ, we'll just start talking about that as a good example of why it's good to use Bookmap, both from a very, very zoomed in micro perspective and also in the Globex session from a zoomed out perspective, just to see where the bigger players manipulating the pressure and by the pressure and the magnetism of the market. So you can see here they added 175 in NQ at this level, which is about 15,565, 15,560, if I can read that correctly. Let me just blow that up. Yeah, 15,565. Okay. They set that as the reference point. It was tested once and they moved away. But where did they come back to get their fuel for the current drive higher? And as I speak, we're at the Globex high, i.e. the high of the overnight session. They came straight back to that resting liquidity. You cannot tell from this screenshot, and unfortunately it was on my old computer before I plugged in my new one later today, whether that was actually filled or not. I'm talking about this liquidity of about 175, 200 contracts. but that was the price that they wanted to get in on. And if we go back to the Wyckoff picture, they basically wanted to drive it back down to here, which is their accumulation zone, to drive it back up to there. What will happen at 8:30 is anybody's guess, and we're not here to predict the future, but it's just interesting to use this and then reference what we see in Bookmap. And if we switch over to ES and exactly the same time period, I think I may have this zoomed out more. What's interesting here, apart from this resting liquidity, which is very similar to the one we saw in NQ, is where they started placing the liquidity further out for future reference. So as they moved higher here, they placed that liquidity there. So if you had zoomed out, you'd have been able to see that level there at 4580, which has been tested so many times in the last week. So that's an important volume profile level, and we can get back to that when I pull over a Sierra volume profile chart. But one of the beauties of Globex trading is that some of these levels are much clearer, and certainly in the way that they approach them or quickly approach them in the Globex session than in the RTH session. So in the RTH session, for example, that might be a perfectly valid level, a magnetic level saying they want to drive it up to that price, but you might get so much action bouncing up, down, up, down, up, down, up, down. Whereas in Globex, I mean, this is a relatively short period of time between the time they got fueled up here and they hit that level there. And then this other level here, which is getting towards the round number at 460, that was taken out in Europe. But it's just interesting. I just thought a zoomed out picture to show you how useful the resting liquidity levels can be in ES. Might be good. Aha, I've got a comment. Thanks, Michael. Yeah, I'm not on my normal microphone. Michael's just pointed out that I may have some sibilance or pops on this microphone. I'll just move it away a little bit. I'm on my headset. I do have what I think is quite a nice microphone, but I'm not 100% certain that it's correctly set up for a streaming session. I'll be back on that next week, but for this purpose, I'm just using a headset, a Plantronics headset, which hopefully is relatively loud and clear. But thanks for the comment, Michael. I've moved it a little bit further away from my mouth, and hopefully there's less sibilance. Okay, I just wanted to show that, and I'm going to drag in, and before we really do focus on Bookmap, let me see if I can drag it in. I'm going to drag in a volume profile chart and see if we can just break down this session and why this relates back to the Wyckoff chart that we looked at a little bit earlier. So in the old Wyckoff terminology, you could consider that as a selling climax, and on the volume profile, it's a strong low, I'd call it. There are many different terms that people use for a low with a very thin wick, but strong low as opposed to poor low is one terminology that I do use, and that can often mean that it will not be revisited in the very near future, although nothing is stopping it coming back later. But it's just interesting seeing how this is broken up and how that then turns into a profile. What I'm trying to say is that there is a tremendous overlap between supply and demand, or Wyckoff, and volume profile. I'd refer you all to my colleague Tom if you want to get deeply involved in volume profile, but I just want to point out that it is something that I do think is useful and I do use in all my trading, and that's why that chart has been built. So it's both a market profile and a volume profile chart, but that is not the purpose of this webinar. I just wanted to point out the overlap between the two. Okay, and it might be worth at this point. Let's have a look. No, we'll come back to that towards the end. Just pulling up the markets before we get towards 8:30. We're at 15 minutes in now. What I've got over here, and I mentioned this in the first webinar that I jointly did with Bruce a few weeks ago before I was traveling. This is a 3-minute chart of ES and NQ on exactly the same time frame, and zoomed out to exactly the same level. The shaded areas are just VWAP. So if I just zoomed out, there's VWAP there as a black line, and that's the first standard deviation, second standard deviation, and third standard deviation in ever decreasing shades of grey. And it's not because I think, wow, VWAP is a magic level and we're going to take a long in ES just there. That is not why they're there. It is just an approximation of current value in the intraday session. In my own analysis, I look at volume or value after the end of the session. So I need a proxy for what may be forming as value during this session. Lots of people have different views. That's just one. And it's not something that I invented. In fact, most of what you use in your trading will not be what you invent. It will be a synopsis of how other people trade, and taking the best bits that you can apply with your own style in that trading. So in other words, this is just a simple 3 minutes chart just to give me context and perspective when we zoom in onto the ES and NQ charts. Okay. We've got exactly the same tools that we had the other day, but everything is now working as it should. If we zoom out in ES, and let's have a look just to describe what I was talking about. I've only got just before the London Open here, something around about 2 a.m. of action on this ES chart, but you can see if I did zoom the vertical column out a bit and drag this up a bit, you can see that effectively we've been driving up. And in volume profile terms, we've been filling in the rather thin profile of the breakdown move during the RTH session. And we're almost back at the settlement from 2 days ago. So yeah, I just wanted to describe that's how I start talking about Bookmap and relating back to the other things that I see. In Globex, I'm always interested in this heavy magnetic liquidity. I call it magnetic because in Globex, that's more often than not, that's what it does. The resting liquidity attracts the larger players or the algos because they know that they can transact business there. This isn't necessarily the case in RTH. It also acts as quite often a repulsion on first approach if it doesn't get filled. And here you can see the repulsion, and here on the second or third, it begins to eat through it. Okay. Right, so it appears that they have been driving back up towards previous value as we approach the 8:30 news. And as I said, we are not going to trade that. We're just going to observe that. The other thing I wanted to talk about that I didn't really get across because of the technical issues in the previous session was to describe in a slightly better fashion how I view what is essentially a casino playing out and how we participate if we do want to participate on more than a very short-term basis. We can go for our big winners. We can go for our very wide stops, but in my opinion, that is not going to give you a long trading career. And one of the things I want to harp about, and the absolute principle or the core backbone of the trading that's going to be discussed in this webinar, is the notion of equal-sized losses. And by that, I mean equal-sized dollar losses. So the notion that when we start talking about the trades, every single time I talk about a potential setup, it is a 50-50 proposition in regards to that individual setup. It is irrelevant how many times something very similar or something that looks very similar has worked in the past. That individual trade is a 50-50, and that's why I drew this diagram, just to explain how edge works. And I've looked at it both in terms of the second column mechanism for getting edge and the third column. So just to recap this, this is a very small sample size. This is 10 equal-sized losers, and we can approximate. We can just say it's 10 losers of $10 each, so that's $100 lost. you can build it in with micros so that commission is fairly harmless in this analysis, or you can bake it into how you trade. One mechanism that I started off early in my career was a high win rate, so that I was looking for something like a 70% win rate. And if you focus on that, you're more focused on the winners than you are actually getting the true value out of the trade. So more often than not, you'll find yourself um, being impelled by the desire to win to cut your winners at about 1R or even less sometimes, which means that you have to have a very, very high win rate, and you have to have an incredible level of discipline. That if you have one trade which or a series of trades, say 3 or 4, which just go against you, 1, 2, 3, 4, that you still have the patience and the discipline on the very next trade to take the equal size loss and not let that loss become a 3R or a 4R or a 5R. So if you do that and you do have that level of patience and discipline, that is a form of edge, which simply is you have more wins than losses. And the other one, which is where we'll be aiming our discussions at, is having the ability with equal sized losses but not equal sized winners. So the paramount rule, it doesn't always apply. Sometimes you'll see something in Bookmap which tells you you've got to get out of a trade now because, for example, some big player has come in and it makes a lot of sense to ditch that. But the paramount rule is that you should not take a trade less than 1R if you apply this methodology. And with the same number of losses, i.e. 10 winners, you should have on average something slightly bigger than 1, so that despite having only a 50% win rate, you're well ahead in terms of edge. And again, we're taking into account commission. But that's just something I wanted to explain a bit better than I did the other day. Okay, right. Okay, yep. Volume profile I've touched very, very briefly on. I won't harp on it too much. Sorry, I'm just dragging that away. Options magnets. Okay, I just wanted to, and I'll just drag it in again. Let me just drag that volume profile chart in again. Okay. I've got a tool. I'm not going to talk about the vendor, but one of the things that I do look at, and this is one of various things that I look at in terms of where are they interested in getting price to. I look at volume profile, I look at price action, I look at supply and demand. I do look at some of this Z0 DTE options expiry. So I do have levels here on this chart, which will start to populate at the RTH open 930. We're talking about these dots here, which are on different levels. If I zoomed onto to the vertical axis, you could see them a little bit easier. They're semi-irrelevant for Globex. What I find to be more useful for Globex is settlement and volume profile, high volume profile nodes and low volume profile nodes. But I do have them there from the previous day. But I do find that on certain days, again, nothing is 100%, but on certain days, it's quite useful to have in conjunction with Bookmap, seeing where those levels are populating in terms of options purchasing, because that is often rather large sums of money to get the options activity at those levels. Okay, we are coming up to, on the clock, 8:24. So we have 6 minutes until the market opens. So yeah, I was going to quickly run through the London Open. So let's have a quick look through that. Okay. So in my terminology, the London Open really opens at the DAX Open. The DAX has a small pre-market session, which is a few minutes before 2 a.m. New York time. I'm talking New York summertime here, so 2 a.m. Eastern time. And the real open starts at 3 a.m., which is just there. Okay. And if we zoom back out to what was the scenario now, in fact, I actually move that all the way out to the beginning of this chart. And drag it right out so we can see what the picture was an hour before the London Open. Okay. And by picture, I'm just referencing the liquidity. Okay. We've got some resting liquidity below at 4,550. I tend to discount the truthfulness, meaningfulness, weight, whatever word you wish to choose, of heavy resting liquidity at a round number, and by round number I mean 50s and 100s, in Globex in pre-market. So that I take with a pinch of salt, but what I do see there is a large band of liquidity up above, and in NQ, if we go back to about the same period and drag it back, because I think it's quite useful to look at both of them together, even if you have zero interest in trading NQ because it's a volatile beast and it's a different risk management proposition. Excuse me, I'm just trying to drag it across. Come on. Okay, that's close enough. Okay. Right, in NQ, I wouldn't say that, hold on. Yeah, you've got this resting liquidity just above from 2 a.m. through to 3 a.m. It's a little bit harder to see on this one, unless I drag it back out. Yep, sorry, that's a bit easier to see, isn't it? Okay, that's a lot easier to see. Right, so we've got some interesting bands of liquidity in NQ. And they're not at round numbers, so they add to the interest. You've got this one at 15,660, which has been stable throughout the period of this chart's history. And again, I apologize that this doesn't go back through the Asian session. You've got another one at 670, and you've got another one that came in a bit flickering, but came in and was relatively steady at 678. And below, you didn't have much. You had this wobble liquidity, which is just market makers, or sorry, which may be or is most likely to be market makers on either edge of price at this current moment in time. But you had resting liquidity clearly above. When you've got that, that is a hint. Again, nothing is for certain, but it's a hint that they may want to go up and tag those resting liquidity levels. And that is a feature to interpret what you might then see in the price action in ES at the London Open. So when you've got these levels, sure, you don't want to trade NQ, have a look and see if you can get any long setups of your own volitional making in ES, knowing that NQ can often drive the market in ETH. Again, it can be either ES or NQ that leads, but one of them is likely to lead the other. It is often NQ. That's one of the ways in which I use that resting liquidity. As it happens in this case, it did drive up, but it's just a way of reading the market. So the message there is you look at the two in tandem and see what are the clearest bits of information that you're getting from either or both of those markets that you can use in the market that you wish to trade. Okay, the clock is saying 8:28 and 40 seconds, so we've got about a minute and a half before. I'm just going to turn on the Financial Juice news feed and see if we can hear it as the US PCE is released. So we should move on to ES. We should zoom into the vertical column.
1 minute remaining. I'll be leading with the US PCE price index year over year.
Right, so we're just going to have that on the background. I will turn it off just after 8:30. It's just so that we can hear it as it's released and observe the action. And we'll zoom right in. So we're into the 30-second splits on the
NQ by 56 stop.
And I'm going to turn on the market pulse. In fact, I think I've got it on. It's just been quite quiet, quite surprisingly quiet for ES. I have no other market pulse vocals on at the moment, or audio on at the moment. So as we approach, we've got more liquidity above, but we also know that we are approaching the value that we broke down from.
10 seconds.
Okay, let's just have a look.
Still waiting on the PCE numbers.
So the
3% as expected. Month over month at 0.2%, 0.2% as expected. Consumer spending month over month at 0.5%, 0.5%, higher than forecast 0.4%, while the core PCE year over year at 4.1%, 4.1%, that's lower than forecast 4.2%. Core PCE month over month at 0.2%, 0.2% as expected.
Okay, I'll turn that off now. I've got some friends at Financial Juice and they will not mind me having done that. By the way, I do use that service every day. So that's one of the things that will come across on this webinar, that I use various bits of information. I don't trade news as such, but unless it's something something awful in terms of very, very bad news hitting the market, which happens in Globex, and they will likely give me a follow-through after a first breakout. But it's something that I think is necessary to have some information on. I do think the economic releases are vital, so you know when the volatility will occur, but I do not predict which way they are going to go. Okay, so just observing that action, we had the liquidity above in ES, and the first thing that happened, which seemed to be prior to the release of the PCE numbers, was the tag of the liquidity at 459,475 or 49595, and then a quick rejection or a stop run of 46 there. It's quite nice that on ES at this time of the day, which is the 8 till 9 a.m. Sequence, is the market pulse highs and lows, the greens and reds above 75 or below minus 75% tend to be quite useful. Again, that's not a recommendation to take a trade based on the market pulse extremes. I'm just saying that they can elucidate the highs or lows in instantaneous price action or momentary price action. Okay, so after that stop run down, which took out some late buyers, we have not been able to approach that low again. So that low there, which after the stop run, which is a very small stop run of 50, 4591, yeah, we are leaving that alone. And NQ, NQ, they are trying to support with liquidity there and pushed through to the two liquidity levels above. So it looks like the prior auction, or the auction prior to the release of the economic data, is continuing at this moment. But be aware that the first move can often be the wrong move on these economic releases, and that might be a reason why you would or would not trade them. In fact, the 3-minute chart's over here, so that's probably a nice easy reference point to have a look at it. At this point, hey Tom, has anybody got any questions? Okay. Now I'm just going to go back to that channel and just double check there. No. Okay. On we go. Right. We've done the recap of what edge is. We've done our live observation of the NQ, and I welcome people to provide suggestions, since we are just launching this breakfast show and I'm building the agenda, and this is really the first week I'm back. If anybody's wondering where I've been overseas visiting family and hiking through the Austrian Alps, which is a very, very pleasant change from sitting or standing at a computer terminal. But if anybody has any suggestions on what they'd like the content for this to cover, especially, I mean, if you want me to go into much greater depth on Wyckoff and exactly how you might want to use Bookmap on that, or you want some more discussion on volume profile in the Globex session and how you relate that back to the volume profile of the previous few sessions, yeah, feel free, and I will take all comments on board, and we can tailor the content accordingly. Okay, I think as I mentioned, I am not a specialist or a one-trick pony, etc. I like looking at lots of ways in which you can analyze the price action. And I also look at algorithmic methods as well for automated entries and exits. So I'm very open to discussing different things that I do. I do think Wyckoff is a great reference point, but it is certainly not the be-all and end-all, and it is not in itself a recipe for success. I think I've seen numerous courses out there on supply and demand, and they do tend to focus more on the instances of price action which works perfectly per supply and demand rules rather than the ones that don't. One of the reasons why I think something like Bookmap is excellent is because it improves the odds. So say you are a supply and demand trader, or you are a pure volume profile trader, having the kind of action in here helps. I mean, we talked the other day about the liquidity markers. And again, this is something that is really, really useful in the Globex session. So, we can see, I mean, even here, we can see when you don't actually need the numbers. Sometimes you can just see it through the coloration of the heat map. You can see when they put the pressure on to drive price up and when they take it off. But having the numbers does help. The stop runs tend to be really, really quite good, and the icebergs, especially in ES in Globex, can be excellent. I said the other day, and I say it again, I find the icebergs in the RTH session not to be as clear, or they don't give you the same level of bias in one direction or over another. Just because you see 100 buy ice does not mean that price is likely to go up. It is just a point of interest which can then create a line in the sand. Okay, back to watching price action. So we've got plenty of liquidity here. Again, I discount the round number, but when I do see that, then I do have a look at where we are in relation to key levels. So my voice may have just drifted off because I was just looking at some of the key levels above. Up above the 4600, one of the things that I look at is last week's high and low. Okay, yep. G, sorry, I didn't, yeah. Is your name G? Okay. G with the wheel. I do like your avatar. That's cool. Yeah, sure. I'm very happy to talk about volume profile and how I use it. And yeah, and just stressing again, whilst I do not have longer term volume profiles drawn in the Bookmap columns, I am using it. And I'm also using this information in the columns. And I repeat again, one of the things that I said the other day, when let me just double check this one. When you've got buyers and sellers at a pivot, i.e. a swing low or swing high, a meaningful swing high or swing low, I'm interested because that in volume profile terms could also mean a poor high or low, which needs to be tested or flushed out, or has the potential for them to flush to get extra stops and such extra fuel to go in whichever direction they want to go in. So it's a volume profile type piece of data for me. The fact that you've got 84 sellers and 14 buyers at this level of 4,590.50. Just in my eyes, you've got some probability, and again, it's impossible to quantify this particular probability. You've got some probability, and it's not a bad probability, that they will come down and retest that. It might not happen before 9:30, but there is a good chance that. And you then take that information and you look at your 3-minute chart, you look at your volume profile chart. Let's have a look. Where are we? It's this one, 4,590.50. And sorry, I'm looking at Sierra and TradingView at the same time. Yeah. So that was just the low flush after the newsprint. So yeah, in volume profile terms, yeah, that could be labeled as, you could have two labels there. You could have the scene of the crime being here where the actual news hit, when that was the first flush down, and the second one, which was a flush of the flush. So, you know, it might well be worth marking because it looks like there may be a capacity to flush even more since there are both buyers and sellers wishing to participate at that price level. Okay. Oh, we've got an ICE, something to talk about when I've just knocked the term ICE. No, I've actually said that ICE in ES in Globex is good. I've knocked it in RTH. This number is really, really small, 17. Okay, we've probably got something bigger than that in NQ if we scrolled back. Not that I can see, but 17, it's insignificant, and it's been taken away already. So it's something I said the other day. I like to see the information, but I place no reliance on it unless it becomes significant. And an ICE of 17 sellers is not significant in ES at any time of the day, unless our relative volume was 1%. And that's something else that I do also look at. I've got various compilations of statistics that I look at, and one of them that I have to hand at all times is relative volume. Again, it's not my concept. I didn't invent it. I've just created an iteration of it in Sierra that works for me, so that at this time of the day, from 1800 New York time to now, I can see that ES has a relative volume of 185% vis-a-vis the last 10 business days, last 10 trading days. So I just know in that, when I look at that number of relative volume, that the market is active and that it is in a state where I may be able to both scalp and get little swing opportunities in Globex. It's something that if it was, say, at 60% in the Asian session, unless we had a remarkable price action, I'd want to stay well clear, because one of the things you do not want to do is burn your capital out, i.e. waste your capital on poor trading conditions, because that is the easiest way just to give your money to market makers, to algos, whatever you want to call them, and then kill your trading career because you do not have the funds when the good price action comes around. Okay, so zooming back out again, if we look underneath, and this is ES, there's nothing below. I mean, we can make this a little bit darker. We've got nothing below that reattracts them at the moment. So that is interesting information to me, especially before 9 a.m. New York time. So at the moment, one of the thoughts that's going through my head is that is magnetic and they are slowly drawing price towards it, and that nothing that happened during the economic release at 8:30 has changed that. Then I'm going across and looking at the volume profile and seeing at 594.25 what is above that in the last few volume profile sessions. So is there something that they might want to tag quickly, or is it just a grind up back to where the previous value was? And if I look at where I can see value, I can't really see much or anything really significant in terms of a nice distribution until about 1050, 1075. That's 461050, 461075 up above. So, one of the volume profile scenarios that will go dot in my head is that during this session, we're going to grind up, provided they get sellers trapped enough to give them the fuel to go upwards towards the liquidity, which is semi-magnetic above at this band here up to 4600. Let me drag it down. When I look at liquidity, you can't just look at the colors in Bookmap. They are beautiful, they are helpful, but you have to look at the quantity numbers. I know in my order book column, I've just got numbers, and some people have the profile, the shape of the profile as well. I am happy with the coloration on the heat map, but what I do want to see is what is that number. So it's 215. Is that significant? How do you know if that's significant? Well, you've got to trade quite a few sessions. You've got to trade this particular period, this 8 to 9:30 a.m. breakfast period, to know whether or not it is. You've got to look at the relative volume. You've got to look at any prevailing news. You've got to be aware of, the current trend. And I discussed this the other day, that on the daily, we are in a very, very strong uptrend, which got stronger, and we have not broken the strongest daily trend line up. So we're in a strong uptrend. We're in a theoretical AI bubble. The biggest tech stocks have been driving the market up. That's the biggest five, have been driving the market up. And looking across at the correlations for today, what am I seeing? I'm seeing that the US dollar is going down slightly. I'm seeing that the Asian equities went up significantly, China especially. I see the DAX went up. I see Bitcoin went up a little bit, which is also something that has a positive correlation. It can be a weak correlation, but a positive correlation with the Nasdaq. I can see that oil is drifting around, that gold is strongly up, which correlates with the US dollar being down. And on the specific other currencies, the heavily traded currencies against the US, I can see that the pound is the strongest of the four majors that I look at against the US dollar, being the yen, the euro, the pound, and the Australian. And I mentioned again the other day that the pound is one that I often have in TradingView as a correlation chart. And by correlation, I mean something, a very, very simple chart. They won't have the VWAP shaded bands, but just something like a 1 minute or a 3 minute of something that has a relatively strong correlation with the equity indices. Okay, let us go back to this action. Yeah, it's relatively slow, which it does surprise me after an economic release of such significance that not much is happening. One of the reasons why I do tend to look at NASDAQ in the Globex session is because the action is a little bit more violent. There is a little bit more to trade. Obviously, there is a larger chance that you will be stopped out pretty darn quickly. But there's also a chance that you'll get to your 1R, your 2R, maybe your 3R. And when I talk about 1R, 2R, and 3R, I am talking about scaling. And it's, again, something that I'm happy to discuss another time. I strongly believe that scaling is linked to randomness. So that if you believe in scaling, you are accepting to some extent the randomness of the markets, in the sense that you cannot predict what is going to happen next. I hear a lot of people, and they may be fabulous traders, saying they will not scale out, or they will not scale out until they've got to 3R or 4R or 5R or whatever. But I don't know what's going to happen next. I've done this for quite a while, and I make absolutely no predictions about what's going to happen next. I'm saying that if the market gives me money, which according to a mathematical model will give me an edge over time, and I did a very simplified grid of that a little bit earlier in this session, then why shouldn't I scale out? Why wouldn't you? If the mathematical odds are saying over time that will make edge. The other reason why you'd think about trading NASDAQ is because you're going to get more repetitions. If your edge is based on, say, an edge, and let's just bring that diagram back in again. Let me just bring it back in. If this is 10 losses and 10 winners, and that gives you that edge there, which is just that bit there, right? And NASDAQ gives you 50 of those opportunities, or 100 of those opportunities in Globex, and ES gives you 3 or 4. Which one are you going to take if you're taking a very mathematical approach to edge in the markets? In my view, you might take NQ over ES, but it's just a personal opinion. Again, it's got a completely different risk appetite, and I'm going to quickly have a look at NQ because I just noticed that they have had a miniature stop run towards a sell ice, and the action has changed. I don't know if you can see that it's quite clearly changed at the moment. I'm just trying to see if there's... I know they've strengthened the liquidity there, but I was just seeing if this was going to be a strong push down or not. Yep, it's quite a nice little push down. Having these low values set for the stop icebergs indicators on NQ seems to be a good idea to me. And this is quite a good illustration of it. Say you use this as your stops and icebergs, and this is a very low setting. You can set it to whatever you want, and I'm happy to do screenshots of my settings in due course. But that there of 7 and 3, a 7 stop run, yeah, it looks absolutely insignificant, that number there, 7. But we knew that the context, which we discussed a few minutes ago, was that the ES liquidity, the magnetic liquidity, was above. So a sell stop run of any significance was a potential buy opportunity in NASDAQ. We also had this little resting liquidity here, which I want to draw your attention to, of 26. 26 is a lot more significant in NQ than 17 is in ES. So this is a target in the sense that the algos and market makers believe, or some of them will probably know, that the business can be transacted at this price level, which is 15,732.50. So a stop run down there, a clear target. If you were going to take a trade, it is a little spring, a breakout failure to the downside that we've discussed. What is the risk? The risk in this session should not be too high unless it's a very, very volatile price action session. So far from the action that we've been looking at, it is not very volatile. It has not looked as if it's very volatile. So you're looking at a tight stop. So that is your trigger, and that was your target. I'm not saying that it will get to the target. I don't predict anything at all, but I'm saying that you get in, you may be getting a market limit, whatever, a market stop order, but your risk is about 4 or 5 points, and you're getting in somewhere there. Say you magically got in at 24 and you had a stop at 19, and you're saying to me, how can I magically set the stop correctly? Well, one of the things that you can do programmatically is have a volatility based stop. It's one of the things that I do believe in, and again, I'm happy to talk about in due course, so that your stop is always calculated based on volatility. That volatility can be related to anything. It can be related to ATR. It can be related to ATR plus volume. So it can be a volume-based volatility. And that your ultimate target for such a trade would be at that resting iceberg. Whether it'll get there now or whether it's going to go and flush down below first, I do not know. But I'm saying that, say you got in magically at the 24 level, yeah, that is a target of 8 and a bit with a 4-point stop. Yep, and the 4-point stop is below that pivot as well. So that is a potential 2R trade. It looks like at this stage that it got close, but no cigar. So that if you hadn't scaled, maybe you'd set your scales up so you'd take at least something off at 1R. Then if you'd got in there and you'd taken off your scales, yeah, you would have either scaled there or scaled there. And what you do at that point, whether you then leave your stops exactly where they are, whether you move them, do whatever, that is something that you have to decide. Whether it's discretionary, whether it's done programmatically, it's something that you have to decide during the course of your trading career. I'm just describing a potential target there based on the fact that it is likely that business can be conducted at 50 to 250 in a rising market with magnetic liquidity in ES above. And again, what is that magnetic liquidity? We reference both the charts, and as I said, if I'm not streaming, I'll have these side by side, not inside the same bookmap window. So you'd have scaled there. Your stop was about 20, you would not have been stopped at so far. It doesn't mean you won't be stopped at. You would have got very, very, very close. Maybe you'd have closed this trade out. Maybe you'd held it. But it's just an example of the potential for using NASDAQ. That to me, close enough is good enough for me. So the fact that it's gone straight through and it's gone even higher, to me does not matter, right? I said that was my ultimate target. Look, I'm into mathematical trading models that have edge over time. I'm not into swinging for a home run. So the fact that this now, if you're in at 20 with a 24 with a 4-point stop, you 24, 14, 16, yes, you could have been 4R straight up with that beautiful stop run continuation through that iceberg. By reference stop run, I'm talking about the 18 stop there and then the continuation onwards. And in the ES, it's grinding. It's grinding slowly but surely. And we have some theories, some rationales why. They don't have to be true. None of what you actually analyze has to be true. It just has to be exercised in a process which is in accordance with a model that gives you a mathematical edge. So, in other words, you can be as wrong as many times as your model allows over the course of a series of trades. Okay, let me just go back and see if there are any more questions, because I haven't really gone back. Don't know if we don't really have many people in the Discord room, and we've got 14 in the YouTube room. Okay. Right. Okay. Let's go back to the calendar. Let's have a look. Where's the calendar? There we go. Let me just bring that back in. Zoom back in. Okay, so we've had the 8. This is just me winding down as we're approaching 9 o'clock. We've had the 8:30 news. It really wasn't much that happened on the back of it. It was a continuation of the auction up. And the only other economic release of any significance, the red lightning ones, is the UMich, the University of Michigan sentiment at 10 a.m. Eastern. But it should be an interesting session. We had a breakdown yesterday. It could be a false breakdown. They could continue it down. But it's interesting that they've used the European session, the post-London Open session, to drive the market back up to where it broke down from value yesterday. Let's have a look. How is NQ going? Okay, so we've got this liquidity here. Let's just look back on that. So if we had the news at 8:30, this liquidity was in place way before then. That was in place before the London Open. So that is true resting liquidity. Unfortunately, it's at the 50s, the round numbers. So it's something that I can't put that much weight on. But the fact that it's steady and that we're driving towards it, it becomes significant the closer we get to it. At some point, if it bounces and bounces and then it keeps going towards it, you have to start putting some significance on it, because if it goes up, it's going to smash through it. It's not something that I will view in isolation and say it has magnetism, because often you'll see a great big fat resting liquidity at a round number like 50 or 100, and it never goes anywhere near it. So it's the other resting liquidities that attract my attention. It's also quite interesting that we almost got there and we have turned around temporarily. Okay. 15, 16. Just flick back to ES. I'm cognizant of the time as well because I'm approaching my last minute. So I want to, I want to leave people enthused that this is a great tool. I hope we can have some really good discussions, or I can provide some information that might be of use to people in a breakfast session in the coming weeks. But I welcome all feedback, from whether you watch this broadcast live or you watch it after the fact, and you saw my thoughts on Wyckoff volume profile and trading in the Nasdaq in the pre-market session. But it does look like ES is grinding back towards yesterday's breakdown of value, and nothing seems to be stopping it just yet. Just seeing how many have traded at the high. 52. Okay, we have just taken out the high that was made just after the news release. It'd be quite interesting to see whether they don't look like they're stopping. That would have been an interesting place for a short, but it does not look like it wants to go down just yet. We had no rejection action, but again, that doesn't mean that it won't. Anyway, thank you very much for watching with me.